Silver is definitely on a tear and it's going to go considerably higher. And it's been doing it since I wrote that article. And I see this continuing. As far as gold is concerned, it's just been consolidating sideways. It's extraordinary how it's just moved sideways for the last, 2-3 months, consolidating and really providing a platform for the next rise up.
And if we see a renewed monetary panic, institutional inflows, or a breakdown in the paper silver market, the $100 level could be achieved easily. This isn't fantasy, it's mathematics, geology, it's geopolitical reality.
Gold's impressive 60% surge in 2024 has outperformed the S&P 500, driven by a weakening dollar and political uncertainty. Yet according to Alasdair Macleod, head of research at Gold Money, this rally may have only begun. Macleod argues that gold remains underowned relative to its strategic importance, setting the stage for silver to capture investors seeking exposure to the momentum in the precious metals market. The silver market has already demonstrated this potential, with dramatic price movements throughout the first half of 2024. Opening June at $32.99, silver surged to impressive 14-year highs, reaching $36.76 by June 9th and ultimately hitting a year-to-date peak of $37.12 on June 17th. Notably, despite some modest pullbacks from these highs, silver has maintained its strength, trading consistently in the $36 to $37 range through the end of the second quarter and into July. Macleod's historical analysis, comparing silver against base metals data from 1900, reveals a significant shift in the metals market behavior. Silver is increasingly acting like an industrial commodity rather than a purely precious metal, reflecting its growing role in modern manufacturing. This transformation is most visible in renewable energy, where silver's electrical properties make it essential for photovoltaic production. The numbers support this industrial evolution. The Silver Institute's World Silver Survey reported a record demand of 680.5 million ounces in 2024, primarily driven by the expansion of solar panel manufacturing. This industrial demand creates a different dynamic than traditional investment buying, potentially providing more sustained price support. For investors, silver now offers dual exposure, protection against monetary uncertainty, similar to gold, while also benefiting from industrial growth in the renewable energy and technology sectors. Before we begin, don't forget to like, share, comment, and subscribe. Hit the bell icon to stay up to date with our latest market insights and updates.
I mean, obviously, there's always volatility in prices of any commodity. But what I did was I thought I ought to have a look at metals prices in the context of the longer term, and particularly silver. Now, silver has been behaving as an industrial metal, and I've got, if you like, a basket of base metal prices going all the way back to 1900. And if you price that in gold, that is quite revealing. Bearing in mind that over reasonable periods of time, and I'm talking about decades, centuries, millennia even, the purchasing power of gold is relatively constant. I mean, the reason for this is that gold is accepted everywhere as money, and unlike Bitcoin, the supply increases, and it increases at a rate which, while it can vary, is more or less in line with the global population. So you have a stability, if you like, when you price anything in gold. And we certainly saw this up until the point where the Bretton Woods standard collapsed. The point is that if you take the prices at the beginning of the last century, so we're talking about over 127 years, you can see this stability in a basket of base metals priced in gold. But interestingly, recently, the value of these base metals priced in gold has actually declined quite significantly. And this year, it's standing at a roughly 77% discount to that 1990 level. Now, it always returned back to that level. Sometimes it'll go over, sometimes it'll undershoot, whatever. But what that indicates is that irrespective of what's happening to fiat currencies and their purchasing power, these base metals as a package, we can expect them over a period of time, we don't know how long, to increase roughly 3 to 4 times. Now, that is before you talk about the debasement effect of fiat currencies on metals prices. Now, this is very important. What it tells us in a nutshell is that base metals are more underpriced than they have been in the last 127 years, 25 years, sorry. This is really quite something. So this has significant implications. We're not just talking about base metals, but if we're looking at other commodities, you're going to get a similar sort of message. And therefore, the implications for consumer prices, let's say on a 5 to 10 year view, is that they're likely to go considerably higher. So the rate of inflation, if you like, even though the government suppresses the numbers, will increase. But returning to silver, silver has been priced like one of these base metals, and there's nothing in it at all in terms of premium for its monetary role. But I think that is also going to return because gold is very, very under-owned, and it's a racing certainty that as members of the public begin to catch up with what's gone on in gold, they will, at the margin, prefer to buy silver rather than gold on the basis that gold has already gone up and silver, has been left behind. So what we're looking at, in answer to your question, is silver is definitely on a tear and it's going to go considerably higher. And it's been doing it since I wrote that article. And I see this continuing. As far as gold is concerned, it's just been consolidating sideways. It's extraordinary how it's just moved sideways for the last, 2-3 months, consolidating and really providing a platform for the next rise up. In technical terms, we have what's called a pennant. Some would call it a triangle. And that triangle consists usually of about 5 legs. You go down, up, down, up, down. Now, we're on the final down leg. And this actually coincides with option expiry for the August contract, which is on Monday. So I would expect to see gold drift off a little bit, but we're talking, 1-2% sort of thing. This is not meaningful in the scheme of things. The other thing I would throw in is that this underpricing of metals as a whole is now leading to indigestion, if you like, in the papers markets. If you look at the best performing commodities this year so far, platinum, palladium, copper, silver, gold, it is extraordinary. And this is reflecting just how undervalued metals as a whole, precious or otherwise, have become. So anyone who thinks that there is going to be a decent reaction in gold and they're going to be able to get into it and all the rest of it, I think they're going to miss it, I'm afraid. And that's the way it is. It's very under-owned. So if you get some sort of crisis and a flight into the dollar, which is what happened in 2008-9, people haven't got the gold to sell. They'll sell something else. So this is why I feel the downside in gold is very limited. And of course, the other thing is, and this is desperately important, it's not so much the gold price has been rising, but the dollar has been falling. And so much so that we've even seen this in the trade-weighted index. So in short, there is a lot of catching up to do. And I think it's all part and parcel of the swan song, if you like, of fiat currencies.
While gold dominates the headlines of the precious metals sector, silver's current valuation suggests a significant opportunity for repricing. With the gold-silver ratio at 87-1, well above historical norms, analysts see potential for dramatic gains as markets recognize silver's evolving role in the global economy. David Morgan, a precious metals analyst, views this ratio as evidence of deep undervaluation. A return to the historical 40-1 ratio would double silver's price, while extreme scenarios involving monetary disruption could drive silver to $100 based on fundamentals alone. Other market observers support these ambitious price targets. Gary Savage, president of the Smart Money Tracker newsletter, expressed remarkable confidence during a May 2025 interview, stating that $100 is going to be a piece of cake for silver. Savage's outlook extends even further, predicting that $500 is likely sometime, maybe in 3 or 4 years, reflecting the potential magnitude of silver's repricing. These projections reflect silver's transformation from a traditional precious metal to a strategic industrial resource. Unlike gold, which remains primarily a monetary commodity, silver has become essential to modern technology. As Morgan notes, while the world could function without gold, it cannot operate without silver, a fundamental distinction that should reshape how markets value the metal. Silver's industrial applications now now span electronics, aerospace, and defense sectors where reliability is paramount. Its unique electrical conductivity, thermal properties, and antimicrobial characteristics make it irreplaceable in technologies ranging from smartphones to solar panels to military systems. This isn't grandmother's jewelry silver. It's a critical component of modern civilization's technological infrastructure. Let's get back to the video.
The metals have just been finally, I won't say, well, I'll say finally, in my time frame, finally. So I was a little bit concerned that gold had taken off on its own. And I wanted confirmation, just like the Dow theory. I wanted a confirmation that the industrials are being confirmed by the utilities and the transports. And we've got that because silver, platinum, palladium are all moving up now. In fact, gold's kind of treading water, which is what I predicted in my April newsletter. I said gold's made its run for a while, probably going to be in a trading range all summer, perhaps longer. And so far, that's true. And now would be the time to consider moving some gold into platinum or perhaps increasing your silver position, which I assume most of my people are pretty silver heavy. But the trade was to do that ratio trade or new money coming into the white metals. And that's proven to be very, very timely. I think that we're probably going to get a pause here for everybody, meaning all, the white metals and gold, but maybe not. It's a very difficult market to analyze because there's a bifurcation between the retail side of silver, which is really full of product, and the industrial side, the commercial side, the paper side, the derivative side, that's very tight. And that's what moves the market. It's the commercial bar side, it's the derivatives, it's the contracts that actually move the market. Not that the physical market won't take over, and it does, but it's the big players, those thousands of contracts every day. And that's very interesting because, as you probably know, the SLV basically can't borrow shares to short anymore. So the market is very, very interesting. In the past, silver was often called the poor man's gold, but that label no longer fits. Not in an age where silver is powering solar panels, driving electric vehicles, enabling AI infrastructure, and playing a quiet yet critical role in the most advanced technologies humanity has ever created. Silver is no longer just a precious metal. It is a strategic resource. Gold, by contrast, remains almost entirely monetary. It's valuable, yes. And if all the gold vanished tomorrow, the world's economy would continue. But if silver disappeared, our energy systems would stall, electronics would fail, and the global push toward clean tech would collapse. In short, we can live without gold, but we cannot function without silver. And yet silver trades at a massive discount, not only to gold, but to reality. The gold-silver ratio, hovering around above 80-1, is historically out of alignment. A reversion to even half that, say 40-1, would imply the silver price doubling from here. And that's if gold holds steady. And if we see a renewed monetary panic, institutional inflows, or a breakdown in the paper silver market, the $100 level could be achieved easily. This isn't fantasy, it's mathematics, geology, it's geopolitical reality. The setup is in place. So what do? First, educate yourself. Understand not just the price action, but the underlying dynamics, the demand drivers, the supply constraints, the monetary backdrop. Don't be fooled by mainstream dismissals or manipulated narratives. Second, own physical silver. No paper promises, no synthetic exposure. The real thing in your hands or trusted vaults. Because in a system built on trust, and that's cracking, tangibility is power. Lastly, if you're serious about navigating this next chapter, consider a membership at the Morgan Report, where we dig deeper than the headlines. We identify which miners and royalty companies offer the greatest leverage and the ones that will multiply, not just move when silver reawakens. And we do it with honesty, integrity, and a long-term view. So there's several things. Point number one is the historic gold-silver ratio. So just to go back to like 40-1, silver would outperform gold by over double right now. Secondly, the market's much bigger knowledge base. In other words, someone that's brand new to the metals, let's say someone's been a stock market investor, they're at the money show, their portfolio really hasn't done much. It's kind of going sideways. And they hear, someone at the conference, and may have been Albert Liu, who was with me, might have been some of the other precious metals guys. And it makes sense. I want to put 5% into the metals. So they're going to look at gold. They're going to look at silver. They're going to say, gold is really kind of at an all-time high, but silver is really undervalued. So I think there's a lot of factors lining up for silver that it's easy to access. I mean, you call up a coin dealer anywhere in the States and say you want to buy platinum, probably 90% of them are going to say, well, we don't deal in platinum, or give me a couple of weeks, let me find it. But silver, they're going to have ready access to it. Or if they don't have it, they're going to be able to get it pretty quick, especially right now with the retail side being so flush with product right now. So I just think there's more knowledge about it, easier access. It's the best known. And so because of all those factors and the squeeze, I mean, if we could, get in a situation where silver starts to make the news because, XYZ manufacturing just put a big order in for silver and they were told they cannot get it delivered for 4 weeks or for 8 weeks or whatever the case may be. And that hits the financial press. People are likely to pay attention and start coming in. So my gut really is, but Danny, as you well know, you know me pretty well at this point. It's hard for me not to be biased. I am. But still, I'm trying to be as objective as I can. If I had to put a bet on it, I'd probably go with silver. I mean, gold sits are looking pretty, so it's jewelry. It's been a monetary foundation for thousands of years, but that's all it does. But silver does everything that you have in a high technological environment, from a flat screen TV to cell phone or microwave oven to membrane switches, to AI, to power distribution, to power control. I mean, silver is that perfect personal assistant as a metaphor that could do nearly anything. And there's 3 things out there in the future that we need it for that we don't even know about right now. That's silver. So why is it less valuable than gold? From a utility aspect, it's superior to gold in many, many ways. So it's just a thought experiment. I am a silver bull. I have gold. I've always recommended both, by the way. And also my report, the morning report, delves into all the resources. Just want to get that out there, shameless plug. But, I already know all the silver stocks. I really don't have that many silver stocks in the portfolio right now. But the ones I do have are kicking ass, and 3 of the picks I have been M&A'd. Mag Silver, one of my favorites, merger and acquisition, Pan American took it over, and 2 more. So good stock picker, or at least above average. I'll say that, it's true. But some of our good picks are getting eaten up by bigger companies.
Silver continues to gain recognition as a strategic asset critical to the technologies shaping our future, while gold maintains its role as a store of monetary value. With silver deeply undervalued relative to gold and essential to modern infrastructure, the potential for a significant revaluation grows stronger. As economic uncertainty builds and demand accelerates, both metals are poised to play increasingly vital roles, but silver, with its dual utility and suppressed price, may offer the most significant upside in the evolving landscape. Is silver finally ready to break out and reclaim its true value? Share your thoughts in the comments below. If you enjoyed this video, don't forget to like, share, and subscribe, and hit the bell icon and turn on notifications to stay updated. Your support enables us to continue delivering the latest market insights to you and the broader community. Thank you for watching.